Crypto Hotep here with another trading video. We are on session number 2 of my trading strategy. So if this is your first time hearing this video, please go to session number 1 where that will go over the first step in my trading strategy. As I mentioned, these are probably going to be broken up sessions here. In how I enter trades, how I chart the actual price, and where my mind is and what I'm thinking about when I'm taking these trades. First and foremost, these videos are for my own edification. I just want to make sure that I'm doing what I need to do when trading and following a consistent process. If you want to steal this process, go ahead. Hopefully it works for you as well. But by no means is this financial advice. Please do your due diligence when investing in crypto or trading crypto stocks, anything like that. And as always, these videos are sponsored by the good folks at Coinbase. Feel free to open up a Coinbase account if you have one, or if you don't, link your account with my Coinbase link because that will help our channel. But with that being said, we'll jump in. So last week we spoke about using Heikin Ashi and supply and demand. Those are the big two pieces of my strategy. As a reminder and a review, we are trading off of the weekly time frames, a longer time frame, just for simplicity purposes and less stress. When you trade off the weekly, you may get less times at bat, i.e. less trades are taken, but you can visualize price a little bit quicker, especially if you have a job or you just can't stay behind the screens 24/7. I find that the weekly is good because you don't really miss a lot. You know, if you miss a day of price or 2 days of price or anything like that, you can still make it up when you're trading the weekly because one candle holds literally 7 days of price action in one candle. The other thing is supply and demand. As we talked about, demand is when price has bullish reaction or bullish price going up. And then supply is the exact opposite with selling pressure going down. So we're still on render. And as we left last week, we have our weekly mitigated zone. So we have our supply zone up here. We drew this a yellow color for our supply zone because it is mitigated. And mitigated just means that price has tapped into this level already and it is held. So price came up, tapped in here, and then cascaded down. This level is still viable. Okay, but we do want to make sure that we know that it's been mitigated because there could be a chance that the third time price comes back up here, it'll blast through this level. We also have this weekly level that hasn't been mitigated. Price just came and then cascaded down here. And as always, when we're looking at fresh weekly and demand levels, we look for 1, 2, 3, at least 3 candles to the downside, or 1, 2, 3 candles to the upside for your weekly demand levels. So what's the next step? So the next step, we've drawn out our supply and demand. We have Heikin Ashi. We understand that. The next thing I typically do after I mark my levels, is I look for chart patterns or any type of confluence or anything I can add to the picture of a possible trade. So if I'm looking at render here, I can see here that there is a chart pattern, and one of the chart patterns that I would see that come to mind is a double bottom. And basically that's when price comes down, reaches a certain point, comes back, reaches another point, comes back down to that very similar, close to exact point, and then pushes up. So I can see that there is a double bottom right there, or that could be viewed as a inverted head and shoulders. And an inverted head and shoulders looks very similar to a double bottom here as well. The good thing I find about Heikin Ashi is it removes that noise of regular candlesticks, and your chart patterns come out a little bit cleaner here. So we can see a double bottom right here, which is fine. And then with that, with your chart patterns, I think one thing to keep in mind, and I'll bring this over here. Here are the basic chart patterns or bullish chart patterns that I'm typically looking at. So we just talked on a double bottom, right? There's also a triple bottom. These are bullish chart patterns, okay? There's an ascending triangle with price coming up. There's the famous cup and handle formation. There's a falling wedge formation where price gets stuck in a channel, still moving downward somewhat, and then breaks out. And then there's that inverse head and shoulders that I talked about that somewhat looks like the double bottom and somewhat looks like that pattern that we just looked at. Now, if you're new to trading and you're saying, Crypto Hotep, how in the world am I supposed to remember these? It just takes time at the charts. That's all I can tell you. So it takes time at the charts, and you have to be willing to study those chart patterns. The more time you're behind the charts and you can see price, the more times that these patterns will just jump out at you. Okay, so very similarly, there's a double bottom here. I can also see a double top, which is the exact opposite of a double bottom right here. So what do we see here where price is? Personally, you could potentially make the case for a falling wedge right here. And again, your price patterns are not perfect. So it's not going to look like a perfect textbook double bottom every time. Your chart patterns, your trend lines, those are all basically traders' perspective. So they're going to be different whether I'm looking at it, whether another trader's looking at it, so forth and so on. But it all matters how you view them. So if I'm looking at my falling wedge here, that's probably where I would potentially draw it. Again, if you are a novice at drawing these chart patterns, you're probably chewing me out right now, but that's how I would draw it. And one of the main reasons is because you have a falling wedge, which is that bullish price pattern coming into our weekly demand area. Those are two confluences, or basically two context clues for a good trade that's going to come up. Again, come back to that, is going to come up. So it hasn't arrived yet. So we don't want to just buy blindly into this zone. The other item that we look at is we look at the RSI. So the RSI is this tool here, and this indicator shows typically when an asset is oversold or overbought. Now, typically how I use it is I like to use it as a momentum indicator, meaning that if price is oversold here and it's bursting through this ceiling, typically the trend is strong and that's going to carry on for some time. I'm not looking for price to just fall right when I see that it's bursted through this through the top here, I should say. Okay, and I think that's one area where traders get it wrong. They say the first thing that traders will do is they'll set the RSI up and then they'll say, okay, great, RSI is set up, price is cracking through the 70 point at the RSI, I'm going to short the market. And it's like, well, no, it still doesn't vouch for that, because price can still carry this on for some time here. Case in point, look at render. Price began breaching the top in November 2023 here at this example. It started coming down not until June 2024. So for that whole time, it was in overbought status, but it was still increasing in price. So that's what I mean when I say it's a momentum indicator, firstly, where it's going to tell you where the price is going to go, or the potential of where price is going to go. So if I look at price currently at $4.61, price is somewhat below the 50. The below the 50 RSI is this line right here. I marked this line out as the midway point in the RSI. So what I sometimes will do is I'll draw a support line near bounces where RSI has bounced. So what I mean is, I'll just take my line tool out. Somewhere like right here, price has bounced off of this, and we're coming across into that. So as you can see, price came down from the 50, bounced again, got rejected from the 50, and then bounced one more time up right here. As we can see, price is coming back down below that RSI, right back near this support area, and what I would be suspecting is we could see a reaction. Okay, so that's what I typically look at. I look at to see where price is. If price is high in this area, I'm not gonna lie, I probably am not going to buy that asset. I'm gonna wait, more so getting into the 50 and below RSI area. If we're below the 50 in the RSI and price is coming into a demand level, that's a good buy for me. And if I also see confirmation, which we will go over. Okay, so the next step I would say is volume. So volume are these bars down here. So all this dictates is it gives you a chart of the volume at which the asset is trading. And then I've also color coded it to showcase if that volume is bullish or bearish. This does not correlate with the color of the actual price candlestick, so don't get this confused. So how I use it is if I see price coming down into a demand area, I have my weekly demand area check marked off. I have a potential target and weekly supply check marked off. I see RSI is below 50, so that means there could be a good buy somewhere here, checked off. And then I look at my volume. Where's my volume at? Is my volume increasing in bearish selling volume? Because that's what I would like to see. If price is coming down into a demand area, what we would like to happen is we would like to see these red candles get smaller and smaller in size and potentially see a green candle, i.e. right here, be produced. So, and then on the volume indicator right here, what we would like to see is we would also see like to see decreased size in bearish volume right here, which we do see. And as you can see on this candle at the start of the week here, we can see that this bearish volume is almost, it looks like a potential for a reversal there. So with that being said, guys, we will cut session number 2 off. The next session, we will get to just confirmation. So how do I actually get in the trade? Why am I getting in the trade? The sizing of the trade and proper risk, and then averaging down or up. So different type of strategy that I have. Some people may not like it or find it viable for them, and that's completely fine. And there are tons of traders on here that you can watch and follow, but that's what works for me. And that's where you need to find out what works best for you. If it's this strategy, great. If it's not, fantastic. But the good thing is with trading, you can find and also tweak and combine a whole bunch of strategies to make it your own. But as always, guys, let me know what you think. Feel free to like, subscribe, comment, and thank you, and happy trading.